o'clock, and I hope I'm audible to all of you.
Yeah, very much.
Okay, so let us start. A very good evening to all of you. Today, we all have gathered on this virtual platform to not only mark the 35 years of journey of our firm, but also to dive deep into a panel discussion on one of the most intricate topics, that is corporate governance. I, Pami Jaiswal, on behalf of Vinod Kothari and Company, welcome all of you to this Felicitation Meet cum panel discussion on corporate governance. Now, before we start the panel discussion, it is worthy to note that as we started our journey from 1988, more specifically, Vinod sir started his journey from 1988, we have witnessed several changes that have taken place in the context of setting the pillars of corporate governance by the lawmakers. It is because of this that we thought to invite some of the most distinguished industry and regulatory experts to share their thoughts on the following issues revolving around corporate governance. The issues include how long have we traveled to arrive at the current situation when it comes to setting the standards on corporate governance? What have been the agents for change? What factors do we think can make a difference in the coming future? And also, how many miles are yet to go to arrive at the desired standard on corporate governance implementation? Discussing these issues will be very crucial for the future of corporate governance. So before I start, I would like to take the opportunity to briefly introduce our special address speaker, our distinguished panelist, and our moderator for this segment. To start with, we have Dr. UK Sinha, who is a former chairperson of SEBI, AMFI, UTI MCL, amongst others. He's also on the boards of several leading companies, including NDTV and Vedanta Limited. He has held several government positions like the Joint Secretary for Banking and Capital Markets in the Ministry of Finance. He's also held several committee positions in several departments and regulatory committees. Sir, we welcome you for the panel discussion. Next, we have Mr. Ram Agarwal, our first panelist. He is a former Central Council member of ICAI and has a post-qualification experience of more than 40 years in various fields like audit, taxation, company law, and consultancy. He's held several eminent positions in the ministry. He's a former director of the Institute of Internal Auditors, USA, as well as past president of Institute of Internal Auditors, India. So we welcome you as well to the panel discussion.
Thank you.
Next, we have Ms. Savitri Parekh, another distinguished panelist. She has over 30 years of corporate experience and currently is the Company Secretary and Compliance Officer for Reliance Industries Limited. She's worked in various sectors, including manufacturing, outsourcing services, private equity, etc. She's been the editor for various publications, including a Ramaiya Guide to Companies Act, as well as a Ramaiya Guide to Directors, amongst other publications. She's been a regular speaker at various programs of ICSI, ICAI, Chambers of Commerce, MCA, stock exchanges, etc. So, ma'am, we welcome you to the panel. Next, we have Mr. M.D. Ranganath, who has over 32 years of experience in the global IT services and financial services industry. He holds board position in several leading companies like HDFC Bank and serves as the chairperson in the audit committee. He was an integral part of Infosys for around 18 years and has been awarded with several laurels, including that of the Best CFO Asia Award in the technology sector by the Institutional Investor publication in 2017 and 18. Sir, we welcome you. Next, we have for the panel discussion, Mr. Pradeep Ramakrishnan. He has been associated with various companies in the early 2000s, and then he joined SEBI, starting off with the primary market department. Also worked for the Southern Regional Office of SEBI from 2008 to 2015, after which he commenced his second stint at the head office. Currently, he handles the issue and listing of corporate bonds at the Department of Debt and Hybrid Securities. Sir, we welcome you to the panel discussion. And now we move to the moderator for this panel discussion, the moderator being Ms. Geetika Anand. Geetika ji started her career with Aditya Birla Group in the year 2006 and continues to be associated with the group for over 15 years. She's been part of several groups constituted by the MCA as well as the Secretarial Standards Board, and also member of various core groups of the ministry as well as ICSI. She's a regular speaker on various topics, including corporate governance, company law, securities law, mergers and amalgamations, etc. So after this brief introduction to all the distinguished and eminent panelists, I would like to hand over the proceedings to Gitika ji, if she can take the panel discussions forward. Gitika ji, can you hear us?
Sorry, I wasn't able to unmute myself. Now I can. Thank you so much, Pammy. And I also welcome everyone here. It's a privilege to be moderating a panel. I'm glad I'm not the one speaking today because there's no way I can speak with a panel like that. At the foremost, gratitude to the Kothari firm for having us here, for having me here. And heartiest congratulations at completing 39 years of corporate excellence. Also, congratulations for the twin awards that you recently got at ICSI. I think it speaks volumes about the work that the firm does. Again, a privilege to be here. I'll straight away dive into the session because I'm sure all the audience is waiting to hear our views on challenges and on the journey that the so-called corporate governance has over the years. I've tried to keep my questions concise so that the audience hears more of you versus me. While I may take the liberty to direct it at one of you, but I would request all of you to please keep adding on because it's not every day that we have a panel which is represented by diverse experience on the in the field. So please feel free to pinch in. I'll start with the main core fundamental topic on corporate governance. And we've often anyways heard a lot of debate around whether it's a moral, it's an ethic. And a lot of people like me in the audience have maybe started our career when corporate governance had started blooming. But the early signs of it, and without maybe naming it as a word, is something that all of you have seen. And many of you have taken part in policy making around corporate governance. We've only seen the following side of it. And therefore, I start with the question is, when we started studying, we were told that governance is when you are in doubt, you disclose. Governance is not just compliance. Governance is a way of being, a way of doing business. While we started with that, as we are practicing in today's scenario, where we see multiplicity of regulations, at the same time, multiplicity of the amendments that come in to forth. We get into debates at various seminars that we do where we say, are we a passive economy? Do we react to situations by making law, or are we upfront? Is the law coming up from jurisprudence or from experience? We hear all these things and we face all these questions. But I personally also believe that governance has started shaping the economy. Maybe, or at least I have come to an age and stage where I can see that happening. And therefore, the larger question is that while you've seen the journey from then to now, as we speak and as we stand today, do you feel that the idea of governance has reached where it should have reached, which is in the mindset of the practitioners versus just limiting it to compliance? And also, when you see the laws around today, starting with the listing regulations and every allied law which in a way adds to shaping the governance for the country, do you feel it is absolutely at the right place, or it's too much, or it's too less? The road traveled is good, and are we placed well for the future? I know I've combined few questions, but what I'm trying to do is to bring in and connect the dots over a period of time for our audience to be able to benefit from your experience. I can maybe start with Sinha ji. So would you like to please enlighten us with your views first?
Thank you so much. Am I audible?
Yes.
You see, when we are discussing the progress and development in this country on corporate governance, the first thing we have to ask ourselves is, what is the purpose of this governance? Because historically, there has been a lot of confusion about it all over the world, not only in India, whether it is for serving the interest of the majority shareholder. You remember in the good old days when we started this discussion, the question was, or the first fight was about the agency problem, whether the management is taking into account the interest of the shareholders and not. So from majority shareholders to entire gamut of shareholders, that is including the minority shareholders. And now the current thinking is about all the stakeholders. In the Indian context, if we look at the Companies Act, the expectation from the board, as per the Company Act, is that the directors have to act in the best interest of the company, its employees, shareholders, the community, and for the protection of the environment. So this is a legal requirement passed by the parliament. This is no longer remains an ethical issue or a moral issue. This is a requirement. If you look at SEBI LODR has taken this concept to an even higher level, because this is one of the few regulations or laws in India which declares itself to be principle driven. And there is a chapter in the regulation, the chapter 2, which says that in case of any incongruity or any dissonance between the principles and the regulations, the principles will prevail. And so far as the stakeholder are concerned, the LODR talks of all the stakeholders and employees, consumers, etc. One important missing piece in these two acts, Companies Act and in LODR, is about the creditors. This gap the problem has been accounted for. It has been tackled through the IBC. Because even if a company is not insolvent, it is nowhere near being insolvent. Years before anything happens to the company, the directors, the management, and everybody is held personally liable if there is, for example, wrongful trading and things like that. I won't go into details of that. So the evolution in this country is, number one, that it is mandatory. Unlike many parts, just to add one more point and I'll stop at this stage. As per a OECD fact book published a few years ago, they did a survey of 49 countries and only 3 jurisdictions had mandatory provisions. India was one of them. So the important thing for us to note here is that it's a mandatory thing, and it covers all the stakeholders. Now, how we tackle that, what are the channels through which the governance norms are to be exercised, that we can discuss. But I'll stop at this level.
Good evening, everyone. And first of all, I would like to give a special welcome to Mr. Sinha. So I have worked when he was the chairperson, and I've been really grateful to have been on this panel when he's also there. In fact, I'm wondering what value will I add on this panel when someone like him is on the panel, because he's the person who has brought out a lot of things on corporate governance. I only executed it. So. So welcome to all the other panelists. It's a pleasure to meet you all here. So I'll just like to add one little point to what Sinha has spoken, and he has in fact said all the things that a regulator could say. Now, when we initially brought in the concept of independent directors, I was a company secretary. And when I was a company secretary, I remember my directors of the listed company in which I was a company secretary looking at this and asking, what is the value that they are going to add when we are being here, we have taken care of the company like our own child. But it so happened that at that point in time, the directors of the company in which I was a company secretary were really those old world directors, like who are actually who look at the company like their own family silver. So they were, but I told them, sir, you are all nice people. There's a possibility that there are other companies where the promoter, or people who just, appoint people whom they want. So essentially, it may not exactly be the same case in other places. Today, if you look at any company, the topic of governance, whenever they talk about, in case something goes wrong with the company, the question of independent directors becomes it's so ubiquitous, right? People just speak about independent directors as if it is the regular. So if you look at it, then this whole thing has become part of the vocabulary. So over a period of time, this is what has happened. And so, for example, even if you take ESG, the moment when you start when you start seeing value in it, that is when people stop the questions and don't look at it as a cost center, but as a center from where you can sort of derive value from.
Yeah. So are we therefore saying that our ability as one of the stakeholders who are practicing the law, complying with the law, our ability to understand the theme or the fundamental of governance that the regulator or the lawmaker was trying to say, comes in only at a later stage, and in hindsight we realize, oh, what was said?
So I may be requested to, I just make a small request. Let me answer that question.
Yeah.
See, I've been a compliance officer. No person likes a new law. Okay. So, but it is the job of the regulator to administer it dose by dose. As I told you, when we brought in the concept of independent director, people were not, going with it. They were saying, why are you doing it and all that. But now today, they have realized the value. So, for example, the whole thing about diversity. When we brought in the rule on one women director, and it came in, Mr. Sinha only was the chairperson. He said that there should be one person. So this was for the sake of diversity. So all the people, what they did, they started appointing their wives, their mothers and sisters on the boards. So we said that, okay, let us wait. Please get comfortable with the women around you, okay, on the board. Then after a point in time, we made that it should be an independent person. So this is how the regulator slowly administers. And now today people realize the value of diversity. There are studies showing as to how a diverse board contributes to effective governance. So I believe while there is some resistance at first, I think over a period of time, people realize never is a regulation accepted in toto at first unless it's a relaxation.
Okay.
Geetika,
Yes, sir.
since you have talked about the evolution of corporate governance, so let me tell you, I had joined CA profession way back in 1969 and qualified in 74, almost 50 years back. At that point of time, nobody knew about corporate governance. What is it and all that? They were never a subject of discussion at board level.
Yeah.
What was important was to complete the annual accounts, audited accounts at the close of the year. And, there were no accounting or auditing standards at that point of time. There were only some guidelines issued by the Institute Chartered Accountant with respect to a specific topic like investment, fixed assets, etc. And these were not mandatory. These were only recommendatory. So companies were, able to choose any accounting policy of their choice. I remember once I calculated, there were at least 12 methods of accounting of inventories at that point of time. Every company applied accounting policy on valuation as per its own requirement, that way. And now we have seen the changes. As we know, so many accounting and auditing standards have been brought in by the institute, and they have been made mandatory also. With the legal force. Legally you have to comply with it. No choice with the company that they won't do. They have to be legally. Also, the statutory auditors and CEO have to confirm that all these accounting standards have been compliant. And similar to the situation was the compliance of legal provisions also. The secretaries were supposed to just call the board meetings and general meetings and maintain the statutory books, minute books, etc. I remember, and again, those statutory records used to be compiled only at the end of the year when the statutory audit was being done. In fact, I remember some client in a later when told me, sir, if there would have been no statutory or requirement, probably would maintain the minute books and all that. So see how the changes have taken place. Now, Mr. Sinha talked about, this SEBI's LODR and other things. So now the situation is totally changed in India. And I think India is at par with many other international, agencies as far as the corporate governance is concerned.
Or maybe in few areas a little ahead also, and that's obviously
of course.
Actually, the view of the regulator and as to how corporate governance is shaped over the years has been very beautifully explained. I would just like to add two further points. Pardon me for my bad throat. At the outset, I would like to congratulate Mr. Vinod Kothari, who I've known for more than 25 years, on completing 35 years of practice, and his brilliant set of team members. And as they say, winner takes it all. At the recent Corporate Governance Award, you showed it by your action that winner takes it all. Wonderful, and I'm sure there are several other laurels that you will gain as you go along. Wishing you all the very best in the years ahead. It's a wonderful topic that you've chosen for discussion today. The way I look at corporate governance from a very basic perspective, I would say that it's like a tripod. Each of these legs is equally important. One is the structural part of governance, which mainly comes from legislation in the form of independent directors, constitution of the board. What should the size of the board be? Appears to be a very simple provision in LODR, but it's a very important one. And as to why has that size been chosen, why not something less? Why not something more? That's another issue altogether. But I would say that's a wonderfully chosen piece, and I would put it under the basket of structural governance. Next is regarding procedural governance. While the term is very, very simple, it's more to do with terms of reference. How exactly would the board function? What kind of matters can be passed by circulation, and what needs to be placed before the board at a meeting? Or for that matter, what is the protocol to be followed? Like for example, under Companies Act, if a person is already a managing director in one company, for him to be appointed in another company, there's a very specific provision. Or for that matter, terms of appointment of a whole-time director, manager, managing director, and so on and so forth. The third tripod is one which is gaining a lot more importance now, is one of transactional governance. At what transactional point would the legislation intervene? A simple one which comes to mind instantly is one of related party transactions. How exactly do you identify? How do you approve? And what is required? Even in private companies, if you refer to a very simple provision under 184, it says that in case of private companies, interested directors can participate provided they have disclosed their interest, which actually shows the intertwining of the governance requirements with the needs of business. And the basic way in which this is ensured over a period of time is diving deep and taking it broader. And that's, to me, all about how exactly governance functions. At a particular point in time, it's like a pendulum, which in India, we've seen it move from left to the right, which is the reason there are questions being asked. But governance always builds business. Thank you, Geetika.
Thank you so much.
Can I? Yeah.
Yes, please.
Hi. First of all, thanks to Mr. Vinod Kothari and team for arranging this excellent conversation with all the esteemed panelists. Mr. Sinha, great to see you again, and Mr. Ramakrishnan. I think over the last, coming back to your first question, certainly from the early 90s, significant progress has been made on the corporate governance, not necessarily only in the companies, even the market infrastructure itself has significantly, probably we can say that we are one of the most efficient and transparent market infrastructure today, especially on the stock markets. Now, when it comes to governance, as both Mr. Sinha and Ramakrishnan and other panelists said, so far the emphasis, at least in the minds of the independent directors, is on the core aspects of related party or a similar must-do kind of activities. However, one important expectation is also that when, as Mr. Sinha said, look, stockholders, society at large. Now, the performance of the management and oversight on the performance of the management, and also linking the compensation to performance, is also one of the core expectations of the stakeholders from the board, especially from the independent directors.
Yeah.
But if you look at over the last couple of decades, let's say last 10 years, very rarely we have seen, I cannot think of any example actually, very rarely we have seen where the independent board has taken certain tough calls when the performance was not matched by the
Yeah.
CEO and the management team, either in terms of compensation or not taking appropriate corrective measures and so on and so forth. But that is also one of the core expectations. One is as agents, as an agency theory, the independent directors have to really provide that oversight on the performance, whether the strategy is getting executed properly, whether is there a scorecard that the CEO and the management are expected to deliver to that scorecard? Is it happening? And are there any tough measures that need to be taken, are actually be taken, or just a tick box? I think while we have done excellently on the broader corporate governance aspects, a lot of progress has been made. But on the performance oversight and linking the compensation, I think still we have to kind of travel a lot. And the second point, which I would briefly like to make, I think today on the listed companies, the governance practices are somewhat visible, and there are a lot of LODR and many other requirements. But increasingly, India is also moving to the private space today, right? In the sense that private limited companies, which are not really private in that sense, because a lot of the funds are investing, insurance companies are investing in them, mutual fund are also investing in them to a large extent. And that is again backed up by the public money. But I think the focus on the large private companies beyond certain threshold, whether the governance practices are as evident as listed companies, I think the answer is still, the jury is still out there. We have seen multiple examples of that. So I think the both needs kind of emphasis. So these are the two specific points I would like to place on table.
Thank you. Thank you. I'll just add one more quick question. It just came to my mind. I'm sorry I've not circulated it. Is that it's a quick, fun question though, which is that assume if corporate governance was a movie and there was a teaser which had to be released. Can any of you think of specific turning points, either in, say, specific instances or as a policy, where you think that it really evolved by leaps and bounds, purely either by that instance or either by a policy decision or jurisprudence, any of that, because you've seen it over the years, and like a few of us said that it may not be coined as a word at that point in time, because we say governance is a way of being. It always existed. It's not that it did not. Now it exists in much more apparent formats, and we can use words and theories around it. So what would, if you can think of any specific instance or a policy or a jurisprudence where you think it really shaped and fast forwarded the journey?
Clearly, I would say 1993 scam. So that really pivoted the entire governance on multiple fronts, whether it is DMAT, whether it's SEBI, whether it is a whole lot of things it kind of triggered. And I think the crisis, India really caught on to the crisis and converted that into series of regulatory and corporate governance frameworks.
So I'd just like to add a bit from my side. So while SEBI did introduce the vocabulary, the term corporate governance in 1992. See, none of these things is going to have merit unless you are going to, if there is any enforcement, right? So unless it's enforced. So the LODR, I believe, was a huge changing point as far as corporate governance is concerned, because if you see, it's perhaps it is the only regulation which makes principles and rules. And if you look at the principles under Regulation 4, largely all the principles are nothing but the principles of corporate governance. In fact, the principles are evolved on the basis of the OECD's principles on corporate governance. And we have also mentioned, since we have brought in principles, after 2015, if you see, after the LODR has come into play, the amount of enforcement actions that have been taken on companies for violation of corporate governance, something as abstract, if I may actually add the word, because generally you get penalized for not filing X, not filing Y, which are straight-jacketed ones. But something when I'm going to say, no, you're not followed this, not this is a related party transaction, which you have actually not said as a related party transaction. I think the game changer comes there. That's when people start looking at it as, yes, the regulator is also taking it seriously rather than just sitting with prescribing a rule. It's also getting down to enforcing it. So the LODR, I believe, was a huge game changer. And that was the first time after the LODR only, SEBI has gotten into enforcement. Now, apart from 2003, there was one minor enforcement against for violation of CG norms, and that was only for filing. The actual enforcement started because of the LODR, and that was only because of the fact that, firstly, it says that while I will not be able to straitjacket corporate governance into rules, it's important to have principles. And if you look at the principles prevail, that is what the LODR says. Right in the end, it says when there's a conflict or if there is something where there's something jarring between the rules and the the principles prevail. So that has been a game changer. And if you look at the SEBI annual reports after that, there have been a lot of enforcement actions taken against entities, which means then the regulator is also taking it seriously. Then it actually scores a point outside when the corporate said, yes, then I also need to take it seriously. So it does not boil down to just a checkbox compliance. So it moves to actual compliance and spirit.
Geetika, you talked about this corporate governance in private sector. My personal experience shows now that more and more private companies or unlisted companies are going towards corporate governance, because they have seen large number of companies in the market, I mean, who have done much better than their peers because of corporate governance and their perception in the market that they are well managed and all these things. I mean, so many many the private limited companies have grown in size and stature. I mean, they have funds from the banks, insurance, as somebody said. I mean, that way. And also there is a fact that companies with better corporate governance and management are in a position to attract and retain employees, senior and mid-level employees, much better than their peers. I mean, so I think all these benefits which are accruing because of corporate governance are probably forcing the private sector also to look for, going to public and all these things. And I know for sure some of the companies in eastern part of the country who are looking to listing, and they have already started restructuring their board by appointing reputed personnel as independent actors, so that the company becomes compliant of all norms when they become ready for listing.
Yeah, and maybe if I can add, just their sheer ability to raise finance or attract better investors, if they have better disclosures and practices, has also come up. I absolutely.
Absolutely.
One more question, maybe.
Geetika, you mentioned about the movie. I think one thing which comes to my mind is we've moved away from Catch Me If You Can to Mehuna.
True. Maybe next question also to Sinha Saab and Pradeep. And this is a personal question. Again, I've not added it here. It just comes to my mind as we are speaking. That we always feel that, and at least that's what I've seen of practitioners around me. And I am unable to sometimes, purely as a professional, not able to distinguish a mindset versus a compliance mindset. Is that, have we reached a stage in governance where we feel that the first set of practitioners, which I would believe are compliance officers and therefore company secretaries today, have we reached a stage where we've been able to intercept their mindset? That if I bring out concepts like ESG, digitization, AI, all those concepts and much more that will get added from time to time. We've seen market rumors as a concept. We've seen RPT, going on a very different scale in the last 2-3 years. Do you come across practitioners in your own way where you realize that when they get this, or when they have to absorb this new law, rather than thinking, oh, I have 20 more things to do and 50 more checklists to make, versus what are we trying to do as an economy? What is the regulator trying to tap? Why do you think they would have added this? Compliance is nothing but, like you said, principle versus rule. You're trying to add few forms and few sets of disclosures by trying to achieve something. Do you think the first question ever comes as what are we trying to achieve? Do you think in governance we've reached that stage of mindset, or we are still a little far from it?
I'll let Pradeep initiate this.
Yeah.
Uh, I was just speaking to someone today on the BRSR, for example. So when we introduced the BRR in 2012, so we were probably one of the first regulators in the world to have done it, and that also happened during Mr. Sinha's time. And for a good measure, we also said that if you want to follow, you can please even follow integrated reporting. So that, if you see, was a big flip to non-financial information being reported in the by the Indian corporate. Corporate governance was the first big thing where non-financial information was being reported in annual reports. Otherwise, until then, reporting was always financial information. Now, today, what is happening is that the BRR has got replaced by the BRSR.
Yeah.
Now, it requires a lot more points of disclosure, and a lot more advanced disclosure, and a lot of things which are there, which are required to be disclosed by the compliance officer. Now, the Institute of Company Secretaries of India calls company secretaries no more as company secretaries or compliance officers. It calls them governance professionals.
Yeah.
And I believe there is a reason why they are being called as governance professionals. And if I, as a company secretary, I'm going to look at it as someone who's just going to add a CD. I remember when I was appearing for one of my company secretary interviews in the year 2001. Someone gave me a CD, the interviewer, the managing director of that company, gave me a CD and said that this CD files all the forms, takes care of all the things that can be done. What is the value that you're going to add? Right? So that is when you understand that, yes, there is some value, a lot of value that you can add. So that is the job of a compliance officer is to look at the company, the secretarial department as not a cost center, but a center from where you can derive value.
Yeah.
So that is going to be the game changer. Secretarial department in a company was actually looked upon as a cost center. Now, today is the place where people are actually looking at proxy advisors issuing recommendations, and they depend on the company secretaries to give their views. So the company secretary is no longer the sole the compliance officer that used to be at one point in time. So as the Institute of Company Secretaries very rightly says, they are governance professionals. So the culture of governance is something which has to be inculcated by the company secretaries, and to that extent, I think there is a lot of value that gets added to the organization. See, what exactly corporate governance is all about. As much as we talk about disclosure, etc., it is all about ethics, right? And ethics, maybe we may not be able to codify ethics. Ethics as a practice has to be inculcated, and that is where the company secretary, adds value. So I believe to that extent, I think it has evolved. It is evolving. It is actually gone from a far cry from what a secretarial department being looked upon as a cost center to a place where it has actually evolved to look at a place from where you can actually add value. And if you in fact see, a lot of companies take a lot of these governance awards very seriously, right? So it means that they are keeping those in mind while they comply.
Gitka, I have a little different opinion. I don't consider only company secretaries as compliance officers, because now it has become so wide, this corporate governance, even CEOs, CFOs, even the board of directors to some extent. I mean, all of them collectively have to ensure the compliance of corporate governance.
Yes.
And as far as, all the compliance officers are now forced to comply, whether they like it or don't like it. I mean, they know if they don't comply, there will be a problem. We have already talked about the benefits accruing to the companies who follow this thing. And now with this penal provisions being in place, whereby officers in default, have to face a lot of penal provisions. I think this fear psychology works very well for Indians, at least, that way. So for our own sake, I think we are forced to comply with the provisions, and I don't think this mindset is slowly changing. Now it is becoming more compliant rather than avoiding.
Yeah.
Geetika, can I come in here?
Please.
Rather than talking about who is the real compliance officer and who has this role, I would like to raise a wider set of players, and let us call them the gatekeepers of governance.
Yeah.
And in that category, I would bring in, say, for example, the company secretaries, the independent directors, the auditors, the proxy advisory firms,
Yeah.
the credit rating agencies.
Yeah.
And I think some of our audience today may not be aware that India is lucky that there is some regulation or some law governing the conduct of all these gatekeepers.
Yeah.
You will be surprised, for example, that credit rating agencies in India are regulated since 1999.
Yeah.
And when the 2008 global financial crisis happened, it was discovered in 2008 that the USA doesn't have any regulation for them. The proxy advisory firms are covered under the research analyst regulation of 2015.
Yes.
So there are commands on them by way of what they have to report, what is the conduct that is expected of them. And that brings us to the question that while they are gatekeepers, they also have responsibilities for which they are accountable, because these are part of laws and regulations and they are accountable. Pradeep in his presentation also talked about non-financial reporting. And I would like to comment on that, that by way of saying that the multi-capitalism approach has taken root not only in India, but in many parts of the world. So people now realize that financial capital is not the only capital which guides the functioning of a corporation or which helps in evaluating the performance of a corporation. I'm reminded to mention about the 2014 UNESCO Inclusive Wealth Report, which said that about 1/3 of the world capital contribution is produced capital, and 2/3 is human capital and natural capital. So if you are only capturing the financial performance of a company in the short run, and another point is, of course, short-termism versus long-termism, because if you are talking of the stakeholder interest, you have to look at it from long-term point of view.
Yeah.
So if you look at it from that point of view, SEBI, as Pradeep said, started with BRR for 100 companies, then 500 companies, then BRSR, and then a BRSR core. It also encouraged integrated reporting in 2017.
Yes.
And the beauty is that, and maybe many corporates don't realize it, that now with BRSR core, an assurance element has been added. Once the assurance element has been added, this is something on which any corporation can be challenged. They are accountable. The numbers that they quote, and these are all quantitative matters. They are quantitative, they are comparable, and they can be referred to at any time in future. So the implication of BRSR and BRSR core has perhaps not been well understood by corporate India now, but going forward, this is going to be a very significant matter.
I'm just taking forward that point. Most of you are also on corporate boards. Just taking forward on the clue that Mr. Sinha just said. You've been on these boards for a long time, and I'm sure you get approached for a few more. Basis your experience at sitting at these boards, have you seen the board discussions moving from, say, value-centric conversations to responsibility-centric conversations? A, is that right? B, is that the place to be? Or is there where we should eventually approach ourselves or the boards to go? And today, when a company approaches you for an independent director position, what are the things that we look out for? Because what you look out for is the reverse side of what the compliance officers, as well as, like we said, conscious keepers, the word I like is a conscious keeper as a corporate professional, would keep in mind. So I'm just throwing open that question as to what do the board members today look for before saying yes to a corporate board position?
You see, the culture of the corporation is the most important element in mind. And what is the tone from the top?
Yeah.
And culture cannot be defined in one sentence or in one paragraph. It is something you have got to feel, and you have to spend a lot of time to feel the culture of the organization.
Yeah.
And if the culture is good, then whether that organization is doing extremely well or it is facing problem, that doesn't matter.
That's very temporary.
In fact, if it needs some help, that is the point where you should be there to help them. So far as the composition of the shareholding is concerned, that is also an important criteria. Unfortunately, in India, I'm using the word unfortunately, but somebody can contest me on this. The promoter shareholding in India for the last 8 or 10 years has remained at the same level, 50%. There have been minor changes in mutual funds or insurance companies or FPIs, but by and large, it has remained at a very high level of 50%. This doesn't give confidence to an institutional investor. And this also creates some amount of uncertainty or doubt in the minds of a potential independent director. I'll also like to flag here a related point that in India, the stewardship code for institutional investor is quite strong. It started with mutual funds who had this code as early as 2008 to 2009. Now, insurance regulator and pension regulator have also allowed this, and the institutional investors have to have their voting policy. The voting policy should be announced on their website. They should also publicize their voting pattern and results and things like that. So that stewardship is also important. And going by the practice in advanced economies, institutional investors play a very important role in improving the quality of corporate governance. And in the last 5-6 years, they've played a very, very important role in matters of ESG, for example.
Yes.
I think just to build upon, I think Mr. Sinha covered a very wide spectrum on the, what do we need to look for.
Yeah.
I think under the broad culture aspect, I would kind of call out the values system, especially of the promoter group as well as the CEO becomes very important. And how do we check that is a key question. Of course, at least in the listed companies, the word of mouth is very strong. It's not very difficult to assess that. And more importantly, what is the quality of the auditor, right? The company is engaged in. And of course, the kind of significant institutional holding, who are the institutional stakeholders, and more importantly, having a chat with the other independent directors. Is that board meeting just a tick box exercise, or is it there is room for a constructive challenging of the strategy, challenging of constructive manner, not for the sake of challenging? Is there openness in looking at multiple perspectives? These become very important. I think at the end of the day, I think who are the other independent directors? That becomes a very critical input, I would say.
Yeah. You use the word values, which is one of my favorite words, and I agree. And maybe I'll just add on one more question before RKG also answers. Is that when you say you get a feedback or you get a feeler, is it what percentage of it is perception based versus fact based? I mean, as an independent, how much are you able to get someone from your office to look at the annual reports prepared or say how things have changed? Versus obviously there are respectable corporate houses and they have a perception of say not having a fraud for so many years or not being in a controversy for so many years, and that also somewhere counts. So just that as an add-on question, please sir, I interrupted you.
See, as Mr. Sinha said in the beginning itself, the culture of the organization is very, very important.
Yeah.
I don't agree fully that, shareholding pattern has to be 50% or more. For example, if a Tata company today holds even 95%, people are not going to challenge whether the corporate governance exists or not.
Yeah.
So
Yeah.
mere existence of 50% or more, I mean, doesn't give an indication whether the company is suspect to,
Sure.
unwanted practices or not in this thing.
Yeah.
Personally speaking, when I am offered a independent director role, I look at the balance sheet first. I mean, that way. Because it gives a clear idea about the culture, character, and board report has now become so huge and comprehensive. You come to know what is in their mind, the existing plans, future plans, and this thing. I think the annual account is audited account probably gives a much better idea. And of course, talking to the independent directors and from the known sources also as to how the company is doing and what is the management like. I think this helps in making a decision about the independent directorship.
Excellent. Savitri ma'am, as a practitioner, have you, over the years, obviously, I'm sure you have seen so many of these changes. Have you encountered a situation where there is a familiarization program that we need to run, and obviously the content of our own familiarization with the directors have also changed, but a very different mindset in terms of how the corporates look at appointing independent directors, while it's the other side. I think the side from the corporate inside out is equally relevant. So what do you look for when, say, I mean, yes, there are concepts around board diversity, around knowing the white spaces in terms of what you would want as a skill set on your board, but beyond those common parameters, how are the corporates these days viewing yeah, independent directors as candidates for the boards?
So, Gitika, when you want to induct an independent director on your board, what is important is the independent director is also a part of the board, which is going to be responsible for making strategic decisions. So, it's not a we versus they, but it's one group wearing the same hat once
Yeah.
they are in the boardroom.
Yeah.
It's quite possible that there may be certain questions which may not have been raised in the past. Now, when I say in the past, I'm referring to a period prior to 1st of April 2014, because Companies Act introduced the concept of independent directors in 2014.
Yeah.
So, and of course, by now the concept has very well got accepted. But what is important is, even for a company which is appointing independent directors for the first time, it's not about knowing a person,
Yeah.
it's more about what does your business need. And if you try to work from that perspective and then try to see, in order to get this, what is the skill sets, what is the kind of competency you need, and then look at a list of persons who possibly would match it, and thereafter try and see who would fit in the bill the best.
Yeah.
It's not about questions per se, which are going to be asked, but it's more about what will those questions add to my business, which is supposed to be understood well. Because it is necessary to bring a
Yeah.
contrarian view, if required, onto
Yeah.
the boardroom.
Yeah.
But what is important is how do you address it? And the tone from the top is what is required to be set rightly. Because you're going to be welcoming all those questions so that when the concept is in a pilot stage, you're able to make all those changes and you're able to bring in the best product onto the market or the best service onto the market when you do ultimately come to the market. Like, say, for example, if you have a private equity fund, that's exactly what happens initially to begin with. It's not about saying, hey, so and so is going to raise an objection, but more about understanding as to what is the objection that's going to be raised, how are we going to be able to meet it, so as to be able to build it further. It's not about, as I said earlier, we versus they, it's about us. What is it that will make us stronger?
Thank you.
And talking of familiarization program, see, most of the directors who come as independent directors uh, are, are ones with a lot of wisdom.
Yeah.
Now, I paused for a minute because earlier in the 60s, 70s, 80s, domain knowledge was given a lot of importance.
Yeah.
But post that, I would say more from 2000 onwards, we've seen a sea change. And what we want is someone who can bring in creative destruction so that you can rebuild. How do
Yeah.
you ensure that you hit at your own strategy, look
Yeah.
at the chinks in the armor, build it better, and make yourself stronger? So it's not about just domain knowledge, but it's about someone who's going to raise those questions, which may appear to be difficult. But so what? You at least have someone who's going to be willing to give all those special points which you need to consider in your strategy. Yeah.
Thank you. I have an eye on the time. We have, Pammy, I know we have 5-10 minutes more to go, and I have still questions that I haven't touched, like ESG, BRSR, AI, digitization, the role all of this plays on the governance. But even when I'm conducting this, I'm sorry to the panelists, I've not asked the questions that I said I will. I've asked different questions. But purely again, as a professional, I feel that all through these 50 minutes, we've looked at the rear view mirror and we've looked at where we are. So yes, we've mapped where we've come from. But if I have to ask, say, one last question to all of you, saying that assume you have to look ahead, at least say 10 years from now. I don't know if we have the ability to look at 20, but say the next 5-10 years, which are the areas where you think the governance journey will next lead to? Because I personally believe that governance is not a destination, but it's more of a journey as how we are all moving along. So in this journey, which are the next few stops that you feel are will be a lot more path breaking than the others, which will anyways develop over the course of compliance or disclosure sort of regulations? So that would be simple, and request everyone to please give us your views.
I think one of the things which has emerged post pandemic is really how to manage the employee expectations broadly in the governance context. For example, there was a key compliance functions, whether it is internal audit, compliance, or even the risk management teams in financial institutions. Now, even the statutory auditors, I think during the pandemic time, I think the trend started, look, we'll do everything from home. That was a compulsion.
Yeah.
But I think even post-COVID, certainly Gen Z, or now what they call as Gen Alpha, all of them expectation is that, look, working from home has become a more like a norm and the core expectations, and how could the governance practices of the firm kind of stitch around that? Now, of course, I'm not saying it's going to happen today or tomorrow, but I think increasingly with the digitization accelerating, especially in India, I do sense that increasingly some of the core compliance functions, how they operate, how they report, how they kind of interact with the board, that's going to significantly change. Who would have imagined that the entire AGM would be digital for years to come, right? So a combination of digital rapid digitization of key processes combined with the employee differences is going to kind of take us to the next paradigm of governance.
Thank you.
I think in my view, Deepika, there are three things. First of all, is digitization and information technology. I think they have their pluses and minuses. We are hearing a lot about cyber fraud and this data loss and all these things. So I think going forward, this is going to be a big challenge for the corporate, how to cope up with this.
Yes.
And another thing is climate change. I think this is going to affect all the corporates very badly. I mean, and everybody globally talking about this. So I think these are the two areas where some regulations might come in future, but what will be those regulations, very difficult to predict at this point of time.
Thank you. Pradeep?
Well, I think the only constant is change. So when it comes to regulations, we will, as far as from the regulator's perspective, we will continue to be, so that there are two ways in which regulators make rules. One is we are being proactive, one is we are being reactive. I think that's not going to change as far as we are concerned. SEBI has always tried to be one step ahead of the market. We have, in fact, India is perhaps one of the few jurisdictions in the world which has, which Sinha very rightly pointed out, a regulation or a rule which governs every aspect of the securities market business. And I believe that's only going to continue. And we will always be thinking today, and whatever we think today, I'm sure the corporate will accept it tomorrow, as has been the case of corporate governance.
Thank you.
So, from 2014.
Okay, no. So, Savita, please go ahead.
Sorry. So from, in 2014, India ranked 142nd in corporate governance ranking out of 180 countries. In 2020, we had moved up quite a few notches and had come to 63. Of course, we've moved up further post that too. Talking of digitization, digitization is a tool. It cannot take away the decision making ability. However, it can make decision making more robust and strong. If
Yeah.
I can take a very, very simple example, if change of bank detail of a creditor is completely digitized and permitted without any manual intervention, it is quite possible that unknowingly you may permit frauds to happen rather than a control check. So, what's important is use digitization, use these as tools, have
Yeah.
those checkpoints or control points where it is necessary so that the processes get automated, decision making becomes more robust, which releases good time and makes functioning more productive.
Thank you.
Over to you, Mr. Sinha.
Okay. Earlier, I raised the point about promoter shareholding, and Mr. Agarwal had a different point of view. And he gave the example of Tata's, and that's saying that even Tata's hold 90% in the company, he would not be worried. That's a fair point. But I'd also like to remind him and everybody that if you look at the model percentage level or the median percentage level which Tata's have in their company, listed companies, it would be around 30%.
Yeah.
That is the type of shareholding that they have, and they are very happily managing the companies there. So one thing that I would like to recommend is that the minimum public shareholding of 25%, which was introduced more than 10 years ago, this needs to be revisited. And in my judgment, in some companies where the promoter shareholding is, I'm just giving a number, say above 70%, for example, then in keeping that in mind, there is a need to mandatorily increase the promoter shareholding. And why I'm saying this is that in most of such companies, either directly or indirectly, covertly or overtly, they control close to 75% or even more in some cases. And the most important advantage they derive is that they can block any special resolution. Not only that, the SEBI requirement of majority of minority voting in case of certain related party transactions, then again it becomes very, very important. So if we want to ensure a fair play in the longer run, and I'm not asking something to be done in a very disruptive manner, it should be done in selected cases with a non-disruptive approach. But I think after 10 years, there is now a need to reconsider whether the minimum public shareholding requirement in the country is serving its purpose or it needs to be relooked. Thank you.
I think with this, I will end this moderating session. I could go on. But thank you so much, all of you, and bearing with the questions that I did not share, I'll ask. Thank you so much. Again, a lot of gratitude, Kothari ji, for giving all of us a chance of having this engaging session. I think all of the panelists would agree with me that these conversations would always be the best sorts, all for those asking, for those answering, as well as for the audience. Thank you so much again.
And one comment for Mr. Kothari. I think it was mentioned right in the beginning that he started his journey in 1988. I would like to remind him that SEBI also started its journey in 1988.
We coincide in the book that's just going to be released in some time from now, sir. We are writing this that 1988 was the year when SEBI was conceptualized. We started a journey. The profession of company secretaries also was born in the very same year.
And sir, let me add to it. Institute also for the first time issued something for the chartered accountants also, this MAOCARO as we call, Manufacturing and Auditors Report Order, that was also in 1988. So
Wow.
1988, that was a landmark year, so to say,
And by popular vote, that becomes the turning point.
Yes.
Of course. So,
also, big kudos to Geetika for conducting this session.
Yeah, thank you, Geetika. Thank you.
Yeah, thanks very much. Thanks.
Okay, bye.
Thank you so much.
Bye.
Thank you.
Pemmy, over to you.
Yes. So I think this panel discussion has been so enriching. There's so many thoughts on the existing scenario of corporate governance, where we are. And of course, the last point which Sinha sir mentioned on the future of corporate governance, one very, very important point that he pointed out on revisiting the minimum public shareholding norms. I think there are so many aspects that we touch upon that the time that we have for the discussions now, which brings us to the second segment of this panel discussion or to this program, that is, we are going to now launch our very own book on the same topic, which is corporate governance, the miles covered and the miles to go. And all these aspects, starting from Savitri ma'am's thoughts on a tripod, corporate governance being compared to a tripod, where we are saying that we look at the structural aspects, we look at the transactional aspects, and we also look at the regulatory or the disclosure aspects. I think all of this and many more, starting from the role of the directors, the independent directors, the role of the proxy advisors, the role of the stewardship code in strengthening the corporate governance for the companies, and of course, in the best interest of the stakeholders. All of this and many more has been covered in this book that we are going to launch today. And it is actually, I'm very fortunate enough to maybe come out and speak for all of us from Vinod Kothari Company to introduce our next guest, who is going to launch this book for all of us. But before that, let me just mention very briefly that this book that we are going to launch today, it is a work of our team of barely 3 weeks, and is, of course, has been built up on several of our existing resources. This work has been edited and consolidated by our very own young colleague, Ms. Payal Agarwal, who has put in a lot of hard work, along with all other contributors in the team. And this book will be available on the premium section of our website, vinodkothari.com. With this, I would like to introduce our next guest, Dr. M.S. Sahu. Sir has been a former chairperson of IBBI as well as a former professor, and is also an acclaimed thought leader in the financial markets. He's been a member of several reputed forums and associations, including Competition Commission of India, SEBI, etc. He's been an economic advisor with the NSE and has served in various ministries of Government of India. He's also served on various boards like of Oriental Bank of Commerce, Management Development Institute, etc. Sir, we welcome you, and we would now like to, we'll request you to do the honors.
Thank you so much. Congratulations to Ms. Payal Agarwal and your colleagues at Vinod Kothari and Company on the release of this magnum opus, the corporate governance, miles traveled and miles to go. And thank you, Mr. Vinod Kothari, for making me a part of this journey. Mr. Sinha mentioned that there was a small gap in LODR and Companies Act, and that was made good through IBC. And I was luckily associated with the IBC journey. And to me, I think IBC has taken the corporate governance to a higher level because it comes to the life of a company when company experiences a serious threat to its life. As you know, the raison d'etre of a company is that it must generate value and share the value among stakeholders forever. But it can do so only if it lives. The life of a company is in danger today than ever before. The average life of a company has declined to about 15 years, less than 15 years, from 19 years about a century ago. So that is the concern, that anything to me that helps to prevent the premature death of companies is corporate governance. And I find throughout this book some kind of a reflection of this philosophy or this idea. But I would just like to touch upon, because I have only 2-3 minutes to talk. So to me, someone mentioned that it was corporate governance has all along been there, but I think it was in the form of a commodity. Today it has become a product. So it is all about maintaining the two balances, two critical balances. One is the balance between the unlimited liability and limited liability. Stakeholders, shareholders particularly, because they enjoy limited liability, on the assurance that the state, country, economy has underwritten unlimited liability. So they expose certain times to open-ended risks. The examples like Bhopal gas tragedy, Satyam fiasco. And this part has been addressed by the so-called corporate governance, key managerial personnel, independent director, related party transaction, minority interest, audits. These are the things which have been done to synchronize and balance the interest of stakeholders and subordinate their interest to those of the company. And of course, to subordinate the interest of the company to those of the society. The second balance is the balance between present and future. If a company lives too much in the present, it loses life to competition today. But if it lives too much in the present, it may lose life to the innovation. Creative destruction destroys more companies than it creates. And this requires strategies like resilience, adaptation, research, risk management, all those things, but for which there is no corporate governance code. I find that, as Mr. Sinha was mentioning, because of these two reasons, these failure to maintain balance, these two balances, and there are some more additional reasons which are threats to the life of a company. And IBC provides an extraordinary mechanism in the hands of creditors to rescue a company with extraordinary powers. So in that sense, I consider that IBC has taken this corporate governance to a higher level. But I must compliment the authors who have come out with a practical guide. This is not a standard textbook. Somebody would like to just buy it and keep it in the shelf or for a possession value. But it has a lot of practical things and has practical things for every stakeholder. So I'm sure that this would make a significant difference as the corporate governance plays an increasingly crucial role in shaping the global business. And I'm sure this work will inspire the positive change and contribute to the advancement of or advance the responsible and transparent corporate leadership. I would say well done on this momentous accomplishment. Congratulations to Ms. Agrawal and her team. Thank you.
Sir, so we shall proceed with the launch of the book.
Please go ahead. Thank you so much.
Thank you so much, sir. So I think with this, let's straight away move to the third segment. And this segment is very, very important for us because this segment deals with felicitating our long, the journey long friends, the journey long well-wishers, the ones who've been with us all throughout, our clients. And I think this segment, as we announced this program, we were to celebrate the completion of 35 years. But we had two more reasons to celebrate, and that was getting the Best PCS Firm Award on the 5th of January, as well as the Best Secretarial Audit Report Award by our partner, Ms. Neetu Poddar, at the 23rd ICSI National Awards for Excellence in Corporate Governance. It is with immense joy and gratitude that we gather here today to celebrate this journey. And we always believed that this is just a journey and it's not something extraordinary that we have done. And this is something which we need to continue doing for the rest of our the time that we have, that we can serve the fraternity, the time that we have to serve the profession. And we have certain values with us, which we've carried all throughout, which is standing true to our ethical values, always being the most active in terms of sharing knowledge, always bringing out of box solutions for our clients, and of course, suggesting the best practices for adoption by the clients. I think here we'll again stop for a moment to take a look at a short video which talks and reflects our journey of 35 years at Vinod Kothari and Company. So let's just play that video for a minute, and then we start with the felicitation segment. that was a short snapshot of the journey of 35 years that we've had. And with this, let us start the felicitation segment. And I would like to request opening remarks by a senior partner, Ms. Vinita Nair.
I'm audible?
Yes.
Okay. Good evening, everyone. I would first like to begin with congratulating the firm for achieving this 35 years milestone and also on being awarded as the best PCS firm. I feel fortunate and blessed to be a part of this team for the last 11 years. And in my view, this has been possible mainly on account of the commitment and efforts taken in 3 areas. First, to perfect the subject knowledge and make it available to the fraternity in an easy to understand manner, be it a discussion for a client query or something that we observe as an industry practice. It has been a constant endeavor to research further and generalize it and make it available in public domain, either as an article or a podcast or a YouTube video. And our organization's motto also talks about focusing on capabilities, and that is extremely critical for every professional today. Second is to provide solutions and not answers to the client. So the effort to understand the actual intent, the bigger picture behind any issue before rendering any advice, coupled with the constant effort we make to ensure that client complies with law in true letter and spirit. And this approach is always logical and backed by common sense before addressing or understanding the requirement under law. Third and most important, I think, has been the efforts that we make to develop our team members. The screening process, be it for a trainee or a qualified, is very stringent. But once the person is inducted, every senior ensures to provide him the necessary guidance to give them exposure in almost every area, be it as basic as formatting a document to uploading a resource on the website, and till writing a book or engaging in advisory audits, etc. So the work environment is very strict when it comes to meeting the deadlines or improving the quality of work. And few of the achievements that we have celebrated today is a testament to the strength of our team. Last but not the least, I also extend my gratitude and thanks to all the clients and well-wishers who are here today to extend the felicitation. I am equally eager to hear them. Over to you, Pammy.
Thank you so much. So now we have the first speaker, Mr. V. Lakshmi Narasimhan. Mr. Kothari recollects that Lakshmi ji was a part of a company called Consortium Finance, whose business was acquired by Magma, and our firm had done business with that company too. Therefore, the association is even longer. Sir.
Yeah, thanks, Pamiji. Thank you very much. And yes, he's right. In fact, I was just looking at your earlier slide in terms of when did you start and what did you do, so on and so forth. And I clearly visualize meeting Vinodji in Delhi in my earlier assignment. And what struck me at that time and what strikes me even today is everything that you have displayed in your skill sets, everything that you have displayed in terms of ensuring that 70% of the partners are women friends is something that he has held close to his heart always. I have never ever experienced a gap between his understanding of a topic and that of the people in his team. Now, you guys may say corporate governance, you guys may say this award, that award. But what is the serious pick that I have had from Vinodji is his ability to ensure that simply carry the team with him and completely leave them with all knowledge that he has. And that I can see that aspect in each and every slide of yours, each and every activity of yours. And while Mr. Sahu mentioned 15 years is the life of a company, here we are seeing it's double that straight away. And it is essentially because of that input that Vinodji keeps giving to people. Now, that is about his team and that is about his, what should I say, big-heartedness in ensuring that everyone grows with him. There is not an occasion where I have felt that he's not a call away. Even as even as late as about 4 days back. If there is a doubt, go to Vinod Kotari's site, pick up the FAQs. If you don't find an answer, then your question is wrong. That's been my approach. So it's an amazing foresight into how he has conducted himself. I would sincerely think that the 2 awards that you walked up to pick up from the honorable speaker is enriched by your acceptance of that award. I seriously consider you guys as so different from any consultant that you can meet in the market. Irrespective of what it is client's interest first. It is completely within the norms and regulations. It is completely from a perspective of longevity of a decision that you take. So I think it's an extremely rare skill set that you tie up all this and make available a very practical, implementable solution to the client. Lastly, Neetuji is somebody that I have known as well while meeting Vinodji. Congratulations to you. Yeah, it is amazing. It is amazing, really, that you have gotten to this place. And seriously, you guys have found the right place to work for. So thank you very much for this opportunity. Rest assured, we will keep consulting you. We will keep pricking your brains. Thank you very, very much.
Thank you so much, sir. Thank you. Thank you so much for your
Mr.
kind
Chamre is
words.
also there, maybe. Is joined
Yes,
from
yes,
some
sir.
other-
Yes, sir. So we have the next speaker, Mr. Sanjay Chamria, and he's known to Mr. Kothari for more than 35 years. A noted financial sector CEO with a huge success in steering the erstwhile Magma FinCorp, his story is essentially a story of strong corporate governance. Sir, over to you. Sanjay, sir.
Yeah, can you hear me now?
Yes, sir, we can hear you.
Yeah, thank you so much for inviting me to share my feelings on this momentous occasion of completion of 34, 35 years of the existence of the firm. And as you mentioned while introducing me, that Vinodji and me go as way back around the time when we both started our respective journey. I would rather put it this way, which is about 1988-89 is when I co-founded Magma and he started the consulting firm. And the relationship started also pretty much around that time. And it has stood the test of time over the last 34 years. And we have seen from a completely unregulated to an extremely regulated to a moderately regulated and to a situation where there was a lot of consultation through the informal advisory group set up by RBI. And over the years, the relationship has also expanded beyond the RBI regulatory advisory to also the corporate law, corporate governance, listing regulations, and a wide variety of topics. And finally, then, as in Magma, as you mentioned, that I was, such an integral part of my life, Magma has been, that so many M&A deals that we did, and there would be so many tricky situations. And so if we had to brainstorm, and Lakshmi was speaking just prior to me, who incidentally spent, I think, the largest part of his career with Magma and with me personally. So I think we all vouch and exude the same feelings that it has been a great partnership, to say the least. And the other thing, like whether it is Anita, Pammi, and all of them, over the last so many years, I've seen all of you also grow. I mean, from the time you all joined as an apprentice to becoming a senior associate, and then I think most of you also having made to the partners coveted list. The things which actually strike me is the problem solving approach and हट के सोचने वाली बात की, मतलब if there is a problem, then how do you kind of find a solution to that? And if required, then make a very strong representation or a request either to the MCA or to the regulator or whosoever may concern. So I would say that over the last 35 years, it has been a very, very enriching experience. And I have actually no surprise or a question as to how did the firm survive 35 years being a first generation. In fact, I would be hugely surprised if it did not, achieve the path and the success that it did, given the strong fundamentals and foundation that has been led by Vinodji, and then I think followed by all of you in the firm. So it is a great testament, the existence and the reputation that has been built. And I think now it is, incumbent upon all of you to carry the legacy forward. And I, from Magma Ventures, wish all of you all the very, very, very best, in the future to come by. Thank you so much for inviting me once again, and I wish you all the best.
Thank you. Thank you. Thank you so much, sir. Thank you so much. With this, we move to the next speaker. And here I would like to say that ITC was the first client of Mr. Kothari when certification of annual returns started in 1988 as the first exclusive engagement for company secretaries in practice. He has been, the next speaker, who is Mr. Rajan Singhi, has been associated with one of the largest FMCG companies in India, which is ITC, for more than 3 decades. Rajan sir, we would request you to speak a few words.
Thank you, Pami. Thank you. So at the outset, I would like to give my congratulations to Vinod Kothari and company for completing 35 years of glorious professional journey. My association with Vinod goes back to 1988, as you just mentioned, when company was formed, initially proprietorship firm and then partnership firm and so on and so forth. And incidentally, I also joined in 1988. Like somebody was mentioning that, 98 SEBI was conceptualized. So our association with Vinod also, I also joined that time in 1988, and we have been worked together since then. So it's over 35 years, and we worked on various matters. And on top of the list, 2 very significant contributions he has made, because I can't list out the whole, but one part, the way your firm, and in particular Vinod, has assisted in the implementation of Companies Act 2013. And the second part as a secretarial auditors for our company. So the kind of guidance and expertise we got from them, it's really noteworthy and it's on top of my mind. And we really value him. Another striking feature which comes to my mind is his clarity of thought and out-of-box thinking and practical solutions. So at least even today, he is no more a secretarial auditor for ITC, but still I just pick up a phone if there is any issues, etc. And I ask him, and I know that he will give a practical solution, and which is, while complying with the law, is there. And I can tell you, he has not failed me so far in this. Whenever I called up, he's given a solution which helped up. So of course, under his dynamic leadership, the company has grown manifold. And now from initially partners from now many partners and branches across the country, etc. So today you all also giving financial consultancy also with Vinod's expertise there, kind of thing. And your firm and Vinod in particular has not only created a name excellence in professional field, but also have helped various professionals in development by organizing various seminars, etc. So which have been a great help and knowledge sharing with the people, kind of in all the professionals. And of course, you people have written so many books. I just saw 30 odd books have been published by you. So that also is a great source of, at times we also refer to those books, etc. So to end it, I on my own behalf and on behalf of the ITC team members, wishing Vinod, Kothari and company all the very best in your future journey. And I wish you achieve even greater heights in the next 35 years to come. Thank you.
Thank you. Thank you so much, sir. Thank you so much for your kind words.
Thank you.
With this, we move to another speaker who is also associated with one of the group companies of ITC. And Mr. Kothari worked during very early days with this group entity, which is ITC Classic, where our next speaker, Mr. Nitin Kotak, was the finance controller. Mr. Kotak is also a co-founder, trustee and treasurer of the Kolkata Foundation and has been a past CFO of Howard Hughes Medical Institute, USA, is currently joining us from Washington, DC. Over to you, sir.
Thank you so much for having me on this call. It's such a pleasure to be witnessing this momentous milestone of Vinod Kothari and company. And my hearty congratulations to Vinod and to all of you, to the entire team for having achieved this milestone, and for the journey which I saw about, reading. I just read about you, the various awards that you won and how you've grown. Vinod will recall my association with him goes back almost 40 years, from mid-80s when he had written his first book on leasing. And we in ITC, I was then a part of what was known as Investment and Diversification Planning Team. We were looking at opportunities for ITC to diversify into various businesses, and financial services was one of them. And we were lucky at that time that Vinod had just launched this book, and we were able to leverage his tremendous amount of insights and knowledge into the leasing and financial services industry. I think, as Rajan mentioned and Sanjay ji mentioned earlier, one of the things that that sort of attracted us to Vinod and his style of working was his out of the box thinking. And while the thinking was out of the box, his solutions were inside the box. So he never suggested anything which was illegal or which was going out of the box of what the law was requiring us to do. So staying within the box of regulations, of compliances, of governance, of actually ethical business, he suggested out of the box ways, which was very innovative. And the other thing in those early days of 80s was his insightful knowledge, his depth of knowledge, and his willingness to share with it. He started at that time addressing various people, and he had a very clarity of thought, and with clarity of thought, he helped us. So we formed ITC Classic in the late 86. Here I have the first annual report of ITC Classic, which we were formed, and Vinod will remember this. And from the, we worked with him before even Classic was formed. We were looking at understanding the leasing business, what we should do, how we should, plan and go ahead. And then for the next 5 years that I was with Classic till the early 90s, Vinod and we used actively working together. Vinod also has something there. Yeah. Yeah. There's your book early. Yeah. We used to actively work together. After that, I've been in touch with Vinod on a personal basis. I moved across ITC for the next many years to various divisions. And I am, in between, I lost track, but I was so happy to hear about your journey today. And I'm glad I was able to join a little early to hear about see the book launch, the awards. I am so happy that, the Vinod I knew at the early 20s, he's grown up the company to such an amazing level. And I'm so proud to see all of you participate and join in that. So congratulations to all of you. Wish you all the very best. I'm sure 35 will soon become 75, and you will all be celebrating many, many years of success. And thank you so much for contributing to the corporate governance world and to the secretarial world of the country. Thank you. Congratulations all over again.
Thank you. Thank you.
Thanks,
Thank you
Atanu.
so much, sir. Thank you so much, sir. Now, the next speaker happens to be the first management trainee under Mr. Kothari. He is Mr. M. Lakshmi Narayan. Sir.
Good evening, everyone. Thank you very much for having me on this call. One probably celebrates events like wedding anniversary, spouse or children's birthday generally. Like these occasions, professional milestones matter just as much. My heartiest congratulations to Vinodji and his team of motivated professionals on completing this 35 long years of success of the firm, and my best wishes for many multiples of 35 in future of this firm. I have known, like everyone said, I have known Vinodji since early 98, the year in which he probably started as the practicing professional. Those days, besides advising his clients all over India in the non-banking field on leasing and hire purchase, he also used to teach fresh students of ICICI on company law. These classes, probably the Calcuttans would surely know, were organized by ICICI and used to be held in a small room above Basu Shri Cinema Hall in Kalighat area, that too in the evenings. Fortunately, as a fresher, I learned the 1956 company law and the way a professional ought to interpret various provisions of the Act from him in those classes. Probably I was the first trainee, as she confirmed, of Vinodji those days. And I distinctly remember he even presented a company law book to me as an appreciation after having excelled in few of the weekly tests he used to conduct. Once I cleared my both groups inter in December 88 in first attempt, he was the one who recommended me to ITC Classic. Classic was a leasing and finance company controlled by ITC Group, where I started my professional career as management trainee in secretarial, reporting to Mr. Nitin Kotak. Since then, I moved ahead in my professional career in Kolkata, as well as subsequently the profession took me to many places like Delhi, again with Mr. Nitin Kotak, Hyderabad, and Mumbai. Wherever I am or I was, I used to seek his professional advice whenever needed in company law or SEBI regulations from Vinod Kothari, and we were in touch professionally all those times. I used to treat him as my mentor in professional field. I also remember just after the 2013 Companies Act was promulgated, in the earlier part of 2014, I had requested Vinodji to specially come to Mumbai for a few days to brief and provide his expectate on new company law to myself as well as my entire team of about 12 qualified CS in Z Group. Vinodji has always been a great friend to me and many of those present online today. I feel so lucky to have been coached by you, Mr. Vinod Kothari, and as a company secretary of several leading organizations, I had the chance to work with you professionally over the years. I have learned so much from you. Vinodji has made so many impactful contributions over the past 3 decades in my professional career that it would be impossible to list them all. He is an inspiration to anyone who has had the pleasure of working with him or seeking advice. The way he always takes out the time to greet everyone and give the right solution and professional advice to their queries will just make it harder for professionals like me to not look beyond Mr. Vinod Kothari or his firm for any insights and advice. Gentlemen and ladies, as we all know, over the years, Vinodji has expanded the scope of his professional services and built a huge and motivated, empowered team that invests back in the development of the firm. Such a motivation, including several team building offsites, which I used to, gather for his team, only endured innovative professional ideas and ensured that his firm grew in size and stature, as evidenced by plenty of awards and accolades the firm has earned over the years, including the recent one in January 24. I once again wish all the best to Vinodji and his team of professionals to carry on their professional services and achieve greater heights one can think of. I am sure this team will take the legacy forward towards a greater success. Thank you, Vinodji.
Thank you. Thank you so much, sir. With this, again, we move to another speaker, Mr. Mahesh Thakkar, who is the General Director of Finance Industry Development Council. Sir.
Good evening, friends. You'll have to bear with me for this sore throat because it's been very bad, but I'll finish within less than 2 minutes, please. Friends, Vinod Kothari, an institution by himself, and we have a very long and long-lasting friendship and business relationships. It dates back to 32 years. He's a mentor, guide, and guru to many of the students, professionals, NBFCs, and corporates. An academician, but with a practical approach. At Association of Leasing and Financial Services Companies, the association of all NBFCs earlier, we have done hundreds of seminars, advisories, projects together, and helped many of our members in a great way. He's pioneered with lots of firsts to his credit. Leasing, leasing of credit derivatives, and many other things. All the while, before he came, people talked in the financial sector of only banks and the financial institutions earlier. He brought NBFCs into limelight. That's the most important contribution. Though a Marwadi by himself, known to be conjuice, but he's very lavish in distributing knowledge and education to all of us. Most of his assistants have been loyal and with him for a fairly long period and have grown in life larger than Vinod Kothari himself in the distribution and of knowledge and education. because he believes in giving full authority to them along with the responsibility. Friends, today we heard a lot of people on the corporate governance. Just to make a note of it, we had, at FIDC, Finance Industry Development Council, which is the body for all NBFCs. We have, released a code of conduct and vision documents on 11th January 24. And copy can be had also from Vinod Kothari's website. There is no shortcut to governance, compliance, and other regulations. This code of conduct, which we have, circulated to all the members, contains, of course, corporate governance, risk management, audit requirements, grievance redressal, delinquency management, education, outsourcing, and to the recovery agents also. It's with a vision that let's embrace innovation, collaboration, and excellence. Let's continue to lead with integrity, creativity, and relentless pursuance of excellence, filled with prosperity, growth, and fulfillment. To conclude, myself and Vinod Kothari have always believed that Reserve Bank of India should enable, enrich, and empower the NBFC sector. And we know our business very well, and will play increasing role in the country's development and GDP growth for the Viksit Bharat. Congratulations and best wishes to BK for peace, prosperity, good health, and long life. Thank you.
Thank you so much. Thank you. Thank you so much. Moving to the next speaker, Mr. Kishore Lodha, who is the CFO at Hinduja Rail and Finance. Sir?
You grow now.
No, I am no longer with Hinduja, so I am with Ugro Capital.
Oh, okay. Apologies.
So I feel privileged to know Vinodji. I know him for about a decade now. And there are many professionals like us who has been immensely benefited from his knowledge and wisdom. Everyone knows that he is blessed with the wealth of knowledge and wisdom. But one thing which makes him, for me, which keeps him apart from others, that I have been associated with many advisors, many consultants, but Vinodji is the only one who puts value much ahead of valuation. So he puts value to his work. He never looks at the valuation of his work. So this is the one criteria which I have seen that only in Vinodji and no other consultant I have worked with in my entire career of over 23 years now. I am sure most of the people who are here would be getting what I am trying to say. And I always believe that India is an over-regulated and under-governed country, and where I don't think that anybody is more qualified to talk about governance than Vinodji, who practices governance in his personal life and in his professional life, which is significantly missing in the present era. So I wish all of you best of luck. And I reiterate that I feel extremely blessed. I am extremely privileged that I know Vinodji personally. Thank you.
Thank you. Thank you so much, sir. With this, the next speaker is Mr. Shailesh Daga, who is associated with Grasim Industries. Shailesh, sir. Shailesh, can you hear us? In the meantime, Mr. Daga joins in. We have another speaker. Now, this speaker is an ex-VKite. And is currently manager lending and leasing specialist in Cape Gemini Americas, Miss Nidhi Botra. Nidhi ma'am, if you can hear us.
I'm here. Yes, I can hear you, Pammy. Thank you so much. And thank you for giving me this opportunity to be able to speak on such a remarkable milestone that we're celebrating today. I want to congratulate Vinod sir. It's been a while. I haven't seen these faces, smiling faces, and it's so good to be able to join this success party today. When I had joined, sir, there was this rumor that there's a 3 months waiting period for even joining as a management trainee, and there are several tests one has to go through, probably like an Agni Pariksha. And I had almost a below average student like me would have probably said I would probably never make it. And then I thought that I have nothing to lose. Let me give it a try. I had 6 rounds of interview with sir. and with the then partners at that time. And I was lucky enough that I got selected. And with the kind of learning that I had, the journey that I had, and I'm sure it resonates with most of the people who've worked with Sir and the team, that the vision and the passion and the principles that become a part of your DNA, it just doesn't leave you, even if you leave the organization. And I think the conflict in your mind when you're working with another organization on why are people not carrying their worries back out of the office hours, why people are happy looking at just the elephant's face and the tail and not the body, and so many dialogues I would have repeated in my head. I think I could probably even write a book on those dialogues by now. And I have so many times replayed so many of our lunch sessions with my colleagues here at the current organization that I'm working at. So I mean, for not even a minute, I've felt that I've left VKC. It's been with me, and I want to say VKC and not and company. I still hold that more dear to myself than VK and company. But I don't think VKC has ever left me and will ever will. But and I want to thank Sir for the kind of time, effort, and energy he puts in shaping people's careers, not just while they are in VK and company or VKC, but even when they leave the organization. I think it gives them a definite path of success, and it makes them a thorough professional that the world definitely sees as an asset. And I want to congratulate all of you who've continued to remain pillars of strength with Sir, and have added to his success and to so many accolades and um, so many awards and trophies that you all have been bringing in glory to the organization, and many more milestones for all of you to come. And I wish I'm able to celebrate the 45th and the 50th and many more such success parties with all of you. Thank you.
Thank you. Thank you so much. We move to the next speaker. The next speaker is Mr. Kalidas
Shailesh is, I
Ramaswamy.
think, unmuted now. Shailesh, if you would like to speak quickly.
Shailesh is there? Yeah.
Thank you, Vinodji, for inviting me. I still recollect it was 1994 when I completed my CS, and I was working for a company in RN Mukherjee Road, and Vinodji had his office at Mercantile Building. And trust me, those years which I spent in Calcutta, I moved out subsequently from Calcutta in 2000 to Delhi and then subsequently to Mumbai. But till the time I was in Calcutta, I will tell you, Vinodji was my mentor. And I got exceptional, guidance, help, and how to analyze the things, how to make it workable, and, how to read the sections and to analyze and interpret by making me writing in a couple of times. And I've spent many evenings, hours in the Mercantile Building when the office was there. And later on, you shifted to Minto Park. I'll tell you, the guidance which you provided me during those days is still helpful to me, which I try to pass on to my subordinates in future. How to analyze the things, since I didn't had anybody in my family who was who was in CS profession, and I still remember the mentorship which you did for me. I'm indebted to you, and I wish all the best in future for you and your company and your colleagues. Thank you very much.
Thank you. Thank you so much, sir. Now, I think we have Mr. Kalidas Ramaswamy, who's a practicing CS. Sir, if you are there, if you can unmute yourself. Yes.
Yeah. Can you hear me?
Yes, sir. Yes, sir.
Yeah, at the outset, let me extend to all of you my heartiest congratulations for having achieved such a significant milestone of 35 years. Is a pretty long period of time in a professional's life, and I think it's appropriate that you have achieved this milestone. And to be honest with you, I mean, I really lost touch with Vinodji since the time I moved out of Calcutta. That's about 14 years ago. but intermittently, thanks to the ICSI, I have had occasions to interact with him and share the podium with him on several, seminars organized in Calcutta. And I have always looked forward to being part of the panel that, where it comes to Vinodji, the erudition comes very easily when he starts speaking, and the clarity of thought is enormous. And I consider myself privileged to have shared the podium with him. And of course, professionally, we haven't had much of interaction except for some exercises which we did sometime, I think, in 2002-03, when I was in Calcutta and part of Ambuja Cements. But nonetheless, I've always respected him for his professional abilities. And I'm sure that with his leadership, the firm will forge ahead in the future and achieve more and more accolades. All the very best to you, all of you. Thank you very much. Bye-bye.
Thank you, sir. Thank you for your kind words. The next speaker is Mr. Sudhakar Saraswatuda. Sir, if you can kindly unmute yourself.
Yes. Thanks very much, Pami, for having me here, for giving me this opportunity. Thanks, Vinodji, and my heartiest congratulations to you and your entire team, Vinita, Pami, Neetu, with whom I interacted earlier. In fact, my interaction with you, with your company, professionally is very less. In fact, virtually it is nil, except that when Companies Act 2013 was legislated, at that point of time, we have a 2-day brainstorming session with your company at that point of time in Bombay. But I'm a passive beneficiary of your company completely. In fact, a couple of months before when I met you, I shared with you also that when I joined the profession, I was working for a leasing company. In those days, I was looking for a book where I can gain some knowledge on the leasing aspect. That point of time, I could come across a book which was written by you at that point of time. And when I saw the photograph of you as such a young boy, could write a book on leasing aspects of the things, I could take you as my inspiration in my professional journey where I was starting at that point of time. And at the same point of time, normally as a professionals, we always interpret the law, but your company dissect the law. That's what the great thing, what I observed in your form is you don't interpret the law, but you dissect the law. And after that, without any kind of a selfishness or anything, you put everything for the dissemination of the knowledge what your company does is an excellent thing. Right from the budding professionals to senior professionals like us, we all get benefited from your this thing. In fact, one of the speakers, he was mentioning, if any kind of doubt is there, just go to the FAQs of Vinod Kothari and company and you will get it clarified everything. At the same point of time, I also take the pride that a practicing company secretary form existing for such a long time, 35 years, it is not a joke. In fact, several people think that the company secretaries doesn't have much scope in the profession as such. You are the person, like a lighthouse, which you can show that by company secretaries can do wonders. For 35 years, kind of a growth what you have achieved, not only you as such, and in fact, I always say that your firm is an incubation to the professionals. You turn the professionals into the excellent professionals, not only professionals, but authors, writers, and so on and so forth. In fact, in one of my LinkedIn postings, I mentioned that in my budding years, I got the opportunity to join you, I could have been a different professional today, what I am today. At the same point of time, I consider, in fact, Vinod Kothari and company as like a Saraswati Mandir. I have great respect to you as an individual and the entire team of yours, every partner of yours. You're all blessed souls. And Ma Saraswati has her blessings on every one of you. I wish you all the very best once again. Congratulations and God bless you all. Thank you.
Thank you,
Panjana
sir.
ma'am is there, Pami?
Yes, yes. Yeah, I was to introduce Rupanjana, Ms. Rupanjana De, Central Council Member, ICSI. Rupanjana ma'am.
Yes, I am. Actually, I'm in the middle of an event. I hope I'm audible.
Yes, ma'am, you're audible. You're audible, ma'am.
Yeah, so I wanted to speak for some time now. So, yeah, okay. So Kothari ji, I first met him, I first saw him, not met him, in 2001. So I recounted the story to him recently also. We were doing our SMTP during those days, and we had an event in HHI where he was coming, and there was like everybody was super excited that Vinod Kothari sir is coming. So we all waited with bated breath to see. Just like a celebrity comes, like we all were waiting to see who this person is, how he looks, and it was like that fan moment for us, literally. That was in 23 years back in 2001, and he has maintained himself the same way, and bettered himself professionally, I'm sure. But appearance wise, he's the same as he was then. We all, I mean, I have grown older, but he has not. And then I would like to, everybody has said so many things. I want to mention in addition to everything. First of all, this one, it is really a matter of pride for us when we go to some part of India and somebody talks about Vinod Kothari consultants and Vinod Kothari ji being the best, the practicing CS firm, or the best speaker that way. So that really makes us so proud. And recently, the 2 awards that have been won by your firm really made us so proud. I know Vinod Kothari Consultants is there, has its presence all across India now, but we would love to call it a firm from Calcutta. Please give us that privilege. And of course, what I wanted to mention is that above everything, I want to mention one thing, that if there was an award for Dronacharya in profession, I think you should have got that, because the number of people, the way and the number of people you have groomed, and I was not lucky enough to get that kind of a grooming, but your knowledge and your excellence as a teacher really reflects in the teaching and learning of your partners, your very young partners who are like also dominating the profession today. So congratulations to all of you on completing the 35 years in the profession. Great achievement, and I wish I am also able to speak again on the 50th anniversary, soon. 15 years, just 15 years from now. Thank you so much.
Thank you. Thank you so much, ma'am. I think with this, we'll request if someone...
Anyone else?
Yeah, anyone would want to unmute and speak a few words.
Just a request that kindly be very brief.
Yes, yes. So I think we've anyway come to the concluding part of today's program. So I think if no one has anything to say further, because we've heard so many things, we are anyway so very overwhelmed. I'm not sure what else to say, but yes, this entire program will go, totally incomplete unless we hear Vinod sir himself. So Vinod sir, I think you should speak a few words now.
Thanks, Atan, Pemi, and thanks everyone who has joined today to join us for this felicitation program. It's so overwhelming. It's extremely happy to see all of you join today. And I would certainly want to recount at least one event, which I'd mentioned that, and Sudhakar sir also was saying that, well, when enters practicing profession, the question always is, would we be able to succeed? And that was a question that I also had before me when I decided to join practice. I would say 1986 or so. I initially started as a practicing CA and then turned to practicing CS. And before that, I had worked for 6 months with a certain leasing company. I thought I have some savings which would last me for 6 months. So let me just try the profession for 6 months. If I'm not able to make my practice work in 6 months, I'll probably turn back to the job. And with this, I made a niche area for myself, which, as Rajan, Nitin, they were all recounting. I wrote this first book on leasing. This is the book that I wrote, and you can see this had a very interesting cover page, which is actually a cartoon clip This cartoon actually reflects a sense of leasing. There's a person who is milking the cow. There's an owner. The owner says, I am the owner of the cow. And the one who's milking the cow says, what I need is the milk, and that's what I have. What do I need the cow for? For the milk, and I have the milk. So that was the essence captured in this book, which came out in 1985. That was my niche area. But what I was trying to say is not about the book, but about the fact that, well, I also had difficulties. And 6 months later, when practice wasn't sounding so very great, we had spent our savings, and me and my wife, we decided that, well, it seems that we are running out of liquidity. So we decided to sell one of our wall clocks to raise some temporary liquidity. And on that very day, Mr. Feroz Vivaina, the director of ITC then, he wrote a check of 15,000 rupees for the consulting services that I rendered to the company. He handed over the check to me, and thereafter, I never had to look back for liquidity as such. So my say to all professional colleagues, after all, is that what matters in profession is the niche that you build for yourself. Either you are secure in niche area. If you are an all-rounder, then you need to find USPs. Are you a low-cost player? Are you an all-India player? Are you playing with, let's say, a variety of scope? So either have a multiple scope for yourself, or you have a geographical presence all over the country, or have some USP which distinguishes you from others, which is the way to build your professional career. It's been an evening of great nostalgia. So many old acquaintances joining today and saying great things. I read in today's Times of India a wonderful dialogue by Guljar Saab. And Guljar Saab says कि यादों का शहर सीखने के लिए अच्छा है, लेकिन रहने के लिए अच्छा नहीं है. यादों के शहर से सीखते रहो, कल यादों के शहर में बस मत जाओ, बिकॉज यादों का सफर उतना ही अच्छा है जितना कि वो हमें आगे बढ़ने की सीख दे सके. तो दैट्स व्हाट आई से टू माई सेल्फ एंड टू ऑल माई कलीग्स कि देख मत मुड़कर परिंदे, सामने आकाश का विस्तार है. देख मत मुड़कर परिंदे, सामने आकाश का विस्तार है. लोग मापेंगे तुम्हारे फासले जो तय किए हैं. हाथ में फीता लिए लोग मापेंगे तुम्हारे फासले जो तय किए हैं. फासलों की है नहीं परवाह, क्षितिज तक जाना तुम्हारी चाह. सांस सीने में, परों में शक्ति है. अनवरत उड़ना तुम्हारी नियति है. संसार है, देख मत मुड़कर परिंदे, सामने आकाश का विस्तार है. So with this, I would say thanks to all of you. And once again, thanks to Pammy and all my colleagues who've been so wonderfully organizing this. Thanks, everyone. Thanks, and have a great evening, and have a very, very happy Republic Day forthcoming. Thanks, Dan.
Thank you.
Thank you. Thank you so much, sir. So just to end with a vote of thanks to all, and we would like to express a heartfelt thanks to all who have made this event possible. My colleagues, our clients, our well-wishers, our professional colleagues there. We also like to extend our gratitude to our panelists, the moderator, our speakers who have shared their knowledge and expertise with us. Their insights have been valuable, and it will also help us gaining a very deep understanding on the topic of corporate governance. Finally, I would also like to thank each and every one of you for attending this event and making it a grand success. Your participation and support has been instrumental in making this event a memorable one. Thank you once again.
Thank you.